How are we getting on, people? Luke here from LAGFX. We are back today with another Sunday Sessions video. Before we jump into today's Sunday Sessions video, I just want to wish you all a happy new year. I hope you guys have set some goals and some targets to achieve by the end of this year. I know LAGFX certainly have. We have a lot of exciting things coming over the course of the next few months, and we can't wait to introduce new things within LAGFX and to our clients. I also just want to take the time to thank you all for the support that you guys have provided over the course of 2022. We have seen great success over all platforms. We are steadily growing and we love to see it. We set a target for the end of the year that we wanted to reach 1,000 subscribers and we reached it. So I'm setting a target here with you guys now that we want 2,000 subscribers by the end of 2023. Now, if you're new to this series and you're new to LAGFX as a whole, what we do on a Sunday is we jump onto the live markets. We give you guys our bias and some zones to work with markets that we feel hold good opportunities for the coming week, as this allows you to see our bias, how we like to analyze and trade the markets, but also give you guys the opportunity to actually profit alongside the LAGFX team. So today I've got 4 markets that I'm going to run through: XAU USD, AUD USD, Euro USD, and Great British Pound USD. I'm going to give you my bias, the zones I'm looking at trading from, and then I'm going to hand you over to James. If you guys do go on to enjoy this video, don't forget to leave it a thumbs up. Now, without further ado, let's jump straight into today's Sunday Sessions video. Okay, so the first market that I'm going to go through today is the XAU to the US dollar market. So we're looking at gold against the US dollar. As we can see, price has recently broken structure to the downside on the extreme timeframes. This line that I have highlighted here is actually highlighting an extreme higher time frame low. So we've seen price actually trade beneath this, which is telling me that supply overall is definitely overruling demand at the moment. Now, what we have seen is price actually break structure fractally to the upside, and we have started to see price trade higher. So obviously a lot of demand has been introduced since we have seen price tap into what could only be a load of liquidity. Now, my thoughts are that price is going to continue in this bullish momentum to one of 2 supply zones that I have highlighted above. So if you haven't done already, highlight these 2 zones for yourself. Look on the 4-hour time frame. You will see around the 1937 to 1959 that there is a huge last buy to sell zone within this impulsive wave that took us lower here that you can highlight for yourself. And there is another supply zone that I've got highlighted around the 1872 to 1879 area. And this was around the 10th of June. So have a look at that as well. Mark those 2 out and let's see how price plays out. But definitely I am expecting price to continue in this bullish momentum and deliver us with buying opportunities up until one of these zones, which we will then be looking to sell from. Now, you'll notice that I've highlighted the break of structure here, as this was the last structural high within this bearishness. As we know, in bearish structure, the highs are protected, the lows aren't. So with price surpassing this structural high, this has then confirmed that this is actually a bullish correction that is being put in at the moment. So you'll notice that if I just zoom in and I focus more on present data, let's just go down to the 1-hour time frame. I have actually highlighted 2 potential buy zones that we could look to buy from, assuming we are delivered with the right confirmation to do so. So I've given you my higher time frame bias and obviously the areas we can look to sell from overall, but these are 2 areas that we could potentially look to buy from, assuming we are delivered with that confirmation. So we can expect that we'll have a fractal correction, bring us down and lower into one of 2 demand zones. And then assuming we are then delivered with a fractal break of structure to the upside after penetrating one of these zones, we can then obviously look to buy into this market and ride price in to our first point of interest. So again, if you haven't highlighted these 2 zones, please do so. So we've got 1788 to 1790, and this was around the 22nd of December. And then we also have 1775 to 1777, and that was from the 16th of December. So pause the video, go and highlight these zones out for yourself, and let's see if price can trail back, introduce more demand into the market, and provide us with a new impulsive wave that we can sit on and profit from. Okay, now moving over to the AUD USD market. This was a market that we had been waiting weeks and weeks and weeks for. To actually sell into this market. As you can see, if I zoom out and look on the 4-hour time frame, we had actually been waiting for this corrective wave to finish penetrate into our sell zone and deliver us with some confirmation to actually sell into this market. We were actually delivered that around the 14th of December, and then we actually got introduced into this market and were able to profit handsomely from those sell positions. Now again, you'll notice that I have highlighted some potential sell zones that we could actually look to get reintroduced from. So again, highlight these zones out for yourself. This is on the AUD USD market. We have seen price actually penetrate this first one here. So if we are delivered with a fractal BOS to the downside, I may be tempted to actually get involved if we see an introduction of bearishness. But price is just putting in its first higher time frame corrective wave before it goes on to take its next impulsive one. You can see that this was its first impulsive wave, taking us lower into the market, breaking structure to the downside on multiple time frames. Price has then just trailed back up. It is now grabbing any remaining supply to the upside before taking that next leg lower. So we still have two opportunities here to potentially get involved in those sell positions. But ultimately, this is a bearish market. I am looking for selling opportunities overall. As you can see on the day time frame, this is evidently a bearish market. So we do want to be looking for those sell opportunities. Hence why I have those two zones highlighted out for you there. My final take profit target is marked at this extreme swing low here. As you know, and as you will see actually in a video that I'm bringing out very soon on the Learn to Trade series, when it comes to placing sell positions, I like to set my take profit just above the previous swing low. This means that our take profit is guaranteed to be struck, assuming that price continues to put in that bearish structure. Because as we know, bearish structure consists of lower highs and lower lows, so we know that price should come lower than the previous lower low. So by setting our take profit just above the previous lower low, we can guarantee that our take profit is going to be hit. So again, on the AUD USD market, highlight these zones out for yourself. We've got two potential sell zones here. Mark them out for yourselves and let's see how price plays out. Okay, now moving over to Euro USD. Again, this is another bearish market. What we have seen as of recently is price actually penetrate an extreme demand zone that I've highlighted from data all the way back in 2002. Now, could this mean that price is actually going to now put in an impulsive wave taking us higher, breaking these highs here? We actually don't know, but assuming price is following the current structure that the market is putting in, we do want to be looking for sell positions. Until price is broken above these highs here, it would be hard to say that this is actually a bullish market. Now, don't get me wrong, we are definitely within a bullish phase. We are seeing a higher time frame correction being put in at the moment. So realistically, we could look to get introduced in some buy positions. We just need to be delivered with the right confirmation in order to actually execute those positions. So again, if I go down on time frames, what I have done is I have highlighted two zones that we could look to get introduced from, this being a smaller time frame zone that we could look to get introduced from, and then this one here being a higher time frame demand zone. Now our take profit is set pretty high up. We've got plenty of room to work with, so there are plenty of opportunities to look to buy into this market. This is a point of interest that I've highlighted out for some time now, and I feel like this is the only point of interest that really holds validity when it comes to actually flipping and reversing this market, allowing price to take another impulsive wave lower. So if you want to highlight this zone out for yourself, by all means do so. Pause the video, mark down these figures here. And then again, if we just zoom in onto current data, highlight these two zones out as well for potential areas to look to buy from. Now remember, when I give these zones and areas, it's important that we are delivered with the right confirmation and enough confluence in order to actually execute the positions. So what we want to see is for price to trail and tap into these zones, penetrate these zones clearly, and then give us the confirmation that that correction going into these zones has finished and the new impulse is ready to take place. So that would be some kind of break of structure. Because if we are being delivered with a break of structure, it's telling us that one trend has finished and a new trend is beginning. We want to get involved in that new trend, which would be the impulsive wave taking us higher into the market to our higher time frame point of interest. Okay, now finally, I'm just going to quickly run through the Great British Pound to the US dollar market. We have seen structure break to the upside. This has told us that this bearish impulsive wave that's taken us lower into this market has finished, and we are now seeing the introduction of a new corrective wave. Okay, so again, we can be looking for buy opportunities. We are within a corrective phase at the moment with these markets. Now you'll notice that I've got a higher time frame point of interest here. Pause the video, highlight it out for yourself on this Great British Pound to the US dollar market. This is an area and a zone that I will be looking to sell from, assuming I am delivered with the right confirmation and confluence. As you know, this is a bearish market overall. We are just within a corrective phase. Price is putting in that correction before it can go on to set that higher time frame impulsive wave, taking us lower, breaking these previous structural lows. How do we know that price is within this corrective phase? Because we've had the confirmation via a break of structure. So this has told us that this entire bearish trend has finished, and we are now seeing a new bullish trend being set into the market. I've got this zone right here highlighted as a potential area we can look to buy from. This is still valid, and there is no reason as to why price can't trail back into this before delivering us with its next fractal impulsive wave. It may look something like this. So if we see price trail in and tap us into this zone and deliver us with another impulsive wave, as you can see, this is still clear bullish structure. So this has been my analysis for this Sunday sessions video. I hope you guys have enjoyed. If you aren't involved in the VIP chats or the Learning Lounge group chat, get yourself involved, because me and James update our analysis on a daily basis. And we provide our clients and LAGFX members with a lot of educational content as well, all of which is helping you guys learn and profit at the same time. Now what I'm going to do is pass you guys over to James.
Hey everybody, hope we are all well. Thank you, Luke, for providing that analysis. And today I'm actually going to be taking a slightly different approach to what I would usually do within these Sunday session videos, where obviously I just try and spend a couple of minutes on a range of pairs to give my outlook for that coming week. Now, this past week, I must say the markets have not been very volatile or liquid at all, as a result of the fact that, during the festive period where we have a lot of bank holidays, obviously a lot of the institutions, the smart money that really provides the bulk of liquidity into the foreign exchange markets are not present. They will be taking this time away. They will therefore not be pumping through that liquidity on a very regular, constant basis, and therefore the markets won't be providing us with those large swing moves that we're typically quite used to seeing and that we can typically trade and really gain a lot of profit from. So what I'm going to be doing, rather than trying to analyze markets that have been pretty sideways, not really updated that much since the last video, I'm instead going to do a bit of a top-down analysis over on US dollar, Japanese yen. So what I always do is I start off on the lower time frames, and I will always try to read the market structure, as that is the most basic form of information that any market can provide us with. What is the structure saying? What are the candlesticks saying? So we can obviously see we've had a move down, a move back up. Now what we're seeing is that the moves back up are not surpassing the start of the previous move down. Okay, so we have a impulsive wave, correctional wave, impulsive wave. The reason why we know that this is an impulse is because it comes to break the previous low, therefore providing the indication that we are creating bearish structure, that we are within a downtrend. Obviously we have supporting evidence of that, given that the previous swing high was created lower than the one prior. Again, after that impulse, the swing high is created lower than the previous swing high. Therefore, what that is an indication of is the fact that we are within a downtrend, of course. So if we follow each single wave of the downtrend, which a wave is representing impulse and a correction. So we have impulse and a correction, an impulse, a correction, an impulse, a correction, and then this prolonged impulse here, which only slightly comes to break the previous low. What that does mean, however, is that inside of this is a main structural point, that this high should have been protected if we were going to continue bearish longer term. Now, we actually had early signs that this may have happened as a result of the fact that this impulsive wave that traded us down took a very long time to form. We tried to have that initial move down. We then had to come back up to introduce more supply. We then tried to move down again. There wasn't enough supply. We come back up, mitigate orders, gather even more supply, and then we finally managed to make a move, which takes a very long time, to come and break the previous low by only a small amount. Now this is an indication already that that trend was coming to an end. We then see once the reversal happens, once we accumulate down here, we have very high volume to the upside. We have that reaccumulation, again, more volume introduced. Now the fact that we are seeing so much volume to the upside is an indication that this bullishness will now remain for quite a long time to come, given that we have so much demand in the market. Therefore, now we know that as we look inside of here, price should remain bullish longer term. Well, now what we're going to do is say, okay, so now that this downtrend is over, rather than us seeing that as an entire trend in itself, we can see that as a single wave in a much higher scheme cycle or trend that is happening within itself, where, okay, we've had one trend happen, we have had an accumulation, we're now having the emergence of the uptrend. Where will this uptrend finish? Okay, is where we need to ask ourselves. So what we would do is we would imagine that this alone is a single impulsive wave. What we then imagine is, well, if we're going to have that correction, where will that correction end? Okay, well, let's look inside of here. Let's look for any buy to sell regions. Okay, we have this entire region, price taps into it. Of course, we have this refined region up here, which we can definitely take, but an overall region that I would like to see mitigated is this overall buy to sell, which of course could be refined if we go to the 1 month. We could definitely try and refine that to that little region or the region up here, but for now I will be keeping it identified as that entire region in itself. And basically what that's going to mean is that my bias for as of right now is that price should remain bullish for a fairly long period of time until we reach this zone. So now what we're going to do is we're going to look inside of this structure and we're going to say, well, of course we know we've had impulse, correction, impulse. Okay, well, if this is an overall impulse starting from this region right there up to that point there, where inside of this impulse, if we go to a lower time frame, can we identify as a point of interest that may need mitigating before the next impulsive wave higher is formed? Well, to start off with, we can definitely see a clear sell to buy in that region right there, which we will identify as a demand zone. Now, in order for us to identify more of these regions, I do believe we will have to go to a slightly lower time frame to try and view and therefore analyze the candlesticks in better depth. I do still like the look of that as a zone. As we come lower, we can most definitely agree that this is another sell to buy region that again may need mitigating, which we will again draw on the chart. And now as we look inside of here, pretty efficient structure, no real regions where I'd say there's definitely a zone, other than a clear sell to buy somewhere in that region. We also may have identified at the time a little zone inside of there, which it appears price has already come back down towards to mitigate before continuing higher. Therefore, we don't really need to concern ourselves with that. However, even if we go back to the 1 week, we can see again this would be the last sell to buy candle. So therefore, I am pretty confident, pretty happy with these three zones I have drawn on my chart as the three major demand zones. So as of right now, what we are going to expect is that within this correctional wave, where we have seen a clear break of structure at this point, so a higher time frame swing point was broken. Therefore, that break of structure is indicating we're going to see bearishness. That bearishness should trade us down into the demand zones lower. So what we're going to do is we're going to look inside of this as bearishness, of course, and we're going to see that right as we've traded down, we've had correction, we've had an impulse. Okay, so what we are doing is we're working within this as the most recent impulse. We've recently had that correctional wave come back up to reverse somewhere inside of here before we've then seen the move lower, the break of structure, price heading lower, and it would appear that we are now going to break this low and have this as a new impulsive wave lower. As a result, what we can then do is we see this as our liquidity point that we want to see price come and liquidate to continue the structure we see emerging, but we can then go to a lower time frame again to view inside of this. We'll say, right, well, we had the break of structure. We know that for a fact. We can also see that inside of here, there is quite a few positions that remain unmitigated. Now, if we draw those on, which can be quite useful, so that if price does deliver that correctional wave at some point, we can be looking at these as relevant points of interest. Okay, well, let's look through this. I also like the look of this as a zone. Now, of course, there's more zones than the ones I'm identifying, and there's quite a few you can identify inside of this, but over my time of analysing the markets, I personally have my own way of identifying which buy to sell regions or which supply zones look the best and seem the best in order to get mitigated, or to phrase that better, have the highest probability of being the zone that causes the reversal. That is something that will come yourself with time. These two are definitely the most relevant ones that I see. I even believe that if we look inside of here on a slightly lower time frame, again, we may see something slightly prominent. I don't really think so. There's no clear buy to sell region inside of here with high enough volume for me to believe that there's a big order there. So I think I'm actually going to keep these two zones as the ones that we have identified. We can set alerts at both of these. So the very first alert's going there at 133.482. So we'll even draw that inside of this, 133.482. And then again, we'll have a second zone down here at 132.416. 132.416. There we go. So the expectation is, of course, that longer term, we want price to come and trade down into one of the three demand zones we identified. But in order for price to get down to those regions, we understand that price has to go through a downwards trend. We are currently within this downwards trend, which is representing a correctional wave. And now we see we've identified the most recent impulse of that overall downtrend. We've seen that we've recently had a major reversal. We're starting the creation of what appears to be the next impulse. We've identified two clear zones that price may react to. So now it is simply a waiting game to see if either of those zones is tapped, and therefore providing us with a position on the short side, on the sell side, so that we can look to trade price down into these zones. Of course, if none of those are tapped and price ends up reaching this demand zone before it reaches a relevant supply zone, we'll then start looking for buy positions, given that valid entry confirmation is delivered. So hopefully that has rounded up my overall bias on this market quite perfectly. I hope you can take away a lot of information from that and now understand how I perform and complete an entire top-down analysis, and how I work that within my bias, and how I will look to use that top-down to aid me in my trading process in any given trading week. But again, thank you everybody for watching this episode of the Sunday Sessions. Hope you've enjoyed the analysis, and we will see you next week for the next Sunday Sessions video. Hope you all have a great trading week, and we will see you then.